Hey, welcome back, everybody. We've made it back to the weekend. Big money is betting like everything's fine, but under the surface, it's chaos. Iran's trying to play it cool. Trump's playing hardball, and for the markets, they're pretending like nothing's wrong. Tariffs, inflation, war risk, it's all layered up like a cake. Let's break down what's really going on and why July could flip everything upside down. So let's take a quick look at the markets, and we see today was an eventful day. We had the S&P 500 break a new record high for the first time in 4 months and 89 days, and it's still looking for the green light to rally as there's all of these moving pieces and variables and factors that's playing with the market. Lost steam into the later half of the day in reaction to Trump in trade talks not going well as tariffs are back in the spotlight. We could see this big old dip in markets across the board. We've seen the VIX slightly pop up, and this was due to trade uncertainty that is now back in the air as Trump announced that the U.S. will terminate all discussion with China relating to discussions regarding trade and denounced a digital service tax on Canada, announced on tech companies. So let's look at what Trump had to say. We have just been informed that Canada, a very difficult country to trade with, including the fact that they have charged our farmers as much as 400% tariffs for years on dairy products, has just announced that they are putting a digital services tax on our American technology companies, which is a direct and blatant attack on our country. So he's calling it an attack. They are obviously copying the European Union, which has done the same thing and is currently under discussion with us also. Based on this egregious tax, we are hereby terminating all discussions on trade with Canada effective immediately. We will let Canada know the tariff that they will be paying to do business with the United States of America within the next 7-day period. Now, pretty much what we get from this is, hey, it's going to be even more uncertain. And this is really spooking to investors and probably back to the idea that, hey, we thought the worst was behind us, but now who knows where we go? Not so fast, Trump said. So the July 9th deadline is coming up, and I just get the feeling that this is just a direct look into how trade's going with some of these other countries, and especially when you consider the fact that we haven't heard much more news regarding all of these. We're supposedly going to have deals made with about 17 countries of our largest trade partners, and so far we've only got one announced with the UK so far, so the United Kingdom. And I think that's just interesting and something to consider if you feel like if you're one of those people that thought that the worst was behind us regarding all of this. We also got the Fed's preferred measure of inflation, the PCE, and what we've seen is that it ticked up higher in May for the third time, increasing by 0.1% for the headline number. With the core PCE, this strips out volatile segments like food and energy that move up and down a lot, and they just like blocking that piece out as it's noise. Well, core PCE rose by 0.2% versus 1% expected in May. The 12-month rate rose by 2.3%. The core version of this went up to 2.7% versus 2.6% expected. So what we've seen is that we've kind of came in a bit higher than we thought we would. The report shows inflation moving up and further away from the Fed's 2% goal, but no major alarm sirens just yet. The increases were expected to happen due to tariff impacts and seasonality due to summer spending, that cyclical spending nature due to the summer. These higher than expected reads support a Fed that wants to wait and see further before they decide to cut rates, and that just knocks July's cut off of the table and that September meeting for a possible cut. But I'd say July is completely off of the table. Now, as far as personal income, we've seen that decrease the most since 2021, a 4.4% monthly rate in May. Disposable income fell by 0.6%. We also seen U.S. consumer spending fall by the highest of this year after buying their new cars and other goods before these tariffs kicked in, really trying to beat these tariffs before they actually became effective. Personal spending fell for the first time since January, falling by 0.1% last month. We also got some consumer sentiment data, and what we've seen is that consumers felt better in June than they did in May, with consumer sentiment rising up to 60.7. What we've seen is that this exceeded expectations, so this was good. The expectations of 60.5. We barely beat, but any beats better, right? So it rose up from May's 52.2 reading, so a sizable increase from there. And what this could be due to is the tariff shock kind of wearing off, and then that taco trade probably entering the chat. Trump always chickens out, so they say. Consumers expect inflation of 5% in the year ahead, which is down from May's read of 6.6. Those expectations. So maybe hope on deals um, hitting the works. And as far as Iran, this one was interesting. So, pretty much, this is a long one. We're not going to read through this long Truth Social post from Trump, but just to kind of sum it up, Iran's supreme leader appears to have claimed that they had won the war with Israel and that the U.S. exaggerated the impact of the attacks on their nuclear facilities out in Iran. And Trump didn't really like this, so uh, he pretty much said the sites were obliterated and I knew exactly where he was sheltered and would not let Israel or United States forces, by far the greatest and most powerful in the world, terminate his life. I saved him from the very ugly, yada yada yada. How are you going to turn your back on me? And pretty much the takeaway is that Trump says the US won't lift their Iran sanctions due to this. Now, if uh, if any of this escalates, that ceasefire's still holding, but where can things go if the ceasefire doesn't hold? Iran may not necessarily need to shoot missiles back and forth or anything, but cyber attacks are somewhere where they could hit us, where it could hurt. So if they focused on these attacks with Iran being considered a leading cyber power, that's probably where a possible war where they could compete on the US front, just because the United States military is like the largest in the country, in the entire world. So Iran, for them to pick a war with the United States, they'd probably need to. It probably wouldn't be missile attacks. It might be more along the lines of cyber attacks. So everybody just watch out. Watch out for the scammers. Change your passwords. Don't click the sketchy links. All that good old stuff. But let's just hope re-escalation isn't an option here. That these peace talks continue. Now back to stocks. Let's go back to the stock market and just leave it here. Investors are betting on a resilient U.S. economy and strong earnings growth ahead as earnings season begins starting in July. So that we're just a couple days from that. We got Trump's spending bill is expected to pass July 4th, the 4th of July, assuming there's no kinks or anything that ends up holding it up. The tariff deadline for tariff negotiations, um, that deadline's coming up. And remember what Trump said would happen. Hey, we're going to give it till July 9th. If these countries don't come in negotiate in good faith, we're going to assign them their tariff rates, and they might not be as good as if they came with goodwill and negotiated in good faith. What we're thinking is that this is probably going to get extended and kick the can down the road. And what everybody is also going to be watching is the Fed for more news regarding what they're going to do as that July, the data we get in July comes in. Wow, look at this little pop in Bitcoin. I wonder what happened right here. Stocks pop. Well, I believe aftermarket stopped trading. So yeah, anyways, July is going to be a busy month. Some are calling for allocating to your more defensive plays and getting away from some of these growth stocks and more so your value stocks or international stocks, just because these valuations are expensive at these all-time highs we're seeing for the SPY and for the NASDAQ 100. So just to protect yourself from any drops, some are recommending placing your hedges now since the market has rebounded so quickly. It's kind of scary that we've climbed so fast in just 89 days from the last high, and we're already higher than that just 90 days from then. So the 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 positiveness, what's the word I'm looking for? Some great signs that the market is hoping for. Maybe let's just leave it on the spy actually. So here's what the stock market's really hoping for, and all the market participants and investors, they're hoping for no serious war to break out. So this Israel stuff and anything with China and Russia, we haven't heard about Russia and Ukraine in a long time. I don't remember whatever happened to that. But we're hoping that there's no serious war that breaks out. That would be bad. The shadow Fed that Trump is expected to announce early, they're anticipating rate cuts due to that person being a yes man for Trump. So they'd probably start placing their agenda and talking and doing interviews like, hey, whenever I become Fed chair in May, whenever Jerome Powell's term is up, we're going to do this. You're going to get huge rate cuts of 1% or 2%, or we're going to slash cut rates to zero. Markets are real optimistic based on what they're hoping they hear from them. We're also hoping that tariffs won't impact inflation very much, which they haven't yet. We've seen a little small bump in the inflation read so far, but nothing like really alarming, like I said. And gotten a few reports maybe in July, and looking backwards at June's data, we might see something, but so far, tariffs haven't done too much harm. And investors are really just hoping that things just continue up into the right. And who knows if that's actually sustainable or not, but we have broken new all-time highs for these stock indices, and I'm interested to see where we go next. So yeah, this week's been a busy week. We've uh man, just like it just doesn't end. We're busy every single week, every single month we're busy, and I'd assume that it doesn't stop there. So next week we got Chicago Business Barometer PMI. This is just kind of how businesses are feeling. We're expecting a read under 50, so under 50 would be more so your not feeling so good read. Tuesday, S&P final United States manufacturing PMI, construction spending, job openings, ISM manufacturing, auto sales. I'd really be watching this construction spending, job openings, and manufacturing PMI and ISM manufacturing just to kind of see what the manufacturing sector is looking like and business investment. We also got on July 2nd ADP employment. Thursday, July 3rd, initial jobless claims. Watch that one. Ooh, we got United States employment report, employment rate, hourly wages, trade deficit, factory orders, ISM services, PMI services. Thursday is the day, and then with Friday being the 4th of July, we're not going to have anything scheduled. So mark your calendars for July 3rd. That is the one because people are going to want to see how the labor market is holding up. So everybody, we've made it to the end of the week. I barely came crawling in. Like, I'm making the video a little bit late just because I've been so busy today, and I'm happy to still been able to read through the news and report my daily findings to you. And I got it all done before 8 o'clock. So super short video compared to regularly, but hey, welcome back. I'm happy that you're here with me, and I look forward to being back next time I make a video, and I hope to see you here. Anyways, hope your weekend's great. Hope your day's great. Hope you sleep great tonight. Hope the fam's doing great, and I hope you have a good one. See you next time.